for this, the ordinary meeting of the Finance and Council Controlled Organisations Committee. We have a number of apologies today. We have apologies from Councillor Walker, Councillor Gilbert, Councillor Lalfiso, Councillor Houlihan, Councillor Barker, and an apology for a possible early departure from the Mayor Raddick. I move that we accept those apologies. Seconded, Councillor Mayhem. And all those in favour? Against? Okay, the apologies are accepted. Confirmation of agenda. Are there any additions, alterations or deletions to the agenda that anyone's interested in? No? Okay, in that case I move that we confirm the agenda without addition or alterations. Seconded, Councillor Lucas. All those in favour? Aye. Against? No. I declare the motion carried. Declarations of interest. Members are reminded of the need to stand aside from decision making when a conflict arises between their role as an elected representative and any private or other external interest they may have. Are there any changes or updates? I see none. In that case, I move that the committee confirms the elected members register and confirms the proposed management plan for elected members' interests. Seconded, Councillor Lucas. All those in favour say aye. Against? Okay, I declare that motion carried. Confirmation of minutes of the Finance and Council Controlled Organisations Committee meeting of the 18th of September 2024. Are there any suggestions or corrections to the minutes? Everyone's happy with them? Okay, in that case I move that the committee confirms the minutes of the Finance and Council Controlled Organisations meeting held on the 18th of September 2024 as a correct record. Seconded, Councillor Lucas. All those in favour? Aye. Against? No. Declare the motion carried. Part A reports. The Forward Work Programme, item 6. I'd like to invite our Chief Financial Officer, Carolyn Allen, to speak to the Forward Work Programme.
Thank you, Mr. Chair. I'm happy to take questions.
Right. Are there any questions of the report then? No? Oh, that looks kind of convenient. I've got one question myself, and that is talking about the DCHL Parent Annual Report. This is the last line here. We've had a presentation on 30th of October. Does that mean we will get another one on the 30th of October 25?
For the current financial year, we will.
No, but it'll be sometime in October?
Yes.
Okay. No?
Oh, because of the election, so it'll need to work around the...
Right.
It'll be before the election.
So should we mark something in the calendar to suggest that we are going to get it at September perhaps, or might it be later?
It's hard to build the Forward Work Programme past July with any accuracy, but we will certainly make sure that we schedule it when we can, either at one of the last council meetings of the triennium or early in the new triennium.
It's an annual one anyway.
Yeah.
Yep, all good. Okay. Well, in that case, since there are no real issues and nobody wants to speak to the Forward Work Programme, I move that the committee notes the Finance and Council Controlled Organisations Committee Forward Work Programme for October 2024. Seconded, Councillor Lucas. Are there any speakers to the motion? No. In that case, I declare the motion carried. Item 7, Financial Report for the period ended 30 September. I'd like to invite Carolyn Allen, our Chief Financial Officer, and Hayden McAuliffe, Financial Services Manager, to speak to the report. I apologise that some of the numbers in this report are a wee bit on the small side to read, but hopefully we will have them a little bit bigger next time. So, questions? There's quite a bit in here. Has nobody got any questions? It's all nicely laid out. Right. Councillor Lucas.
Sorry, I was rapidly trying to find my questions. Sorry about that, and I nearly dealt with the coffee everywhere. My first question is in terms of the capital program, and it might be to Mr. Ward, which is really on from my community board meeting yesterday in terms of the Mosgiel stormwater pump stations and network. And there was a question just exactly the timing of the work on that and what that is encompassing. And I promised that I would ask this question today so that those who are watching would get the answer on this.
Thank you, Deputy Mayor. And it may be easier to give you a more fulsome answer outside of this meeting,
Yes.
if that's permissible, please.
Yes, that's fine.
Mm-hmm.
I have some further questions. On capital, I see there's just a small amount of expenditure on healthy homes, and I thought that our healthy homes, I know we have staff here who would be able to answer that. I thought our healthy homes, we had finished all that work ahead of the due date and that that was complete now.
That's correct, Councillor. We did finish the work and it was complete. This will just be final wrapping up of invoicing and retentions.
Okay, thank you. And on our other favourite topic, which is toilets, I noticed that we've already spent our full year budget, and then in the commentary, I get the impression that the work on the toilets that are scheduled for this year is not yet complete. So is there more work to do?
We're behind schedule on the toilets if you compare it to the original program of work set in 2021, but we do have a toilet update report coming to Council by the end of the month, so you'll get a fulsome report of exactly where it's at then.
What joy, thank you. And my other question in particular is under operating under personnel costs, where we're unfavourable variance for year to date of 769,000, and in particular I notice in the governance and support line it's $1 million unfavourable, and it was when I look back it was 250 in July, it was 500 at the end of August, and now it's $1 million at the end of September. And I notice it says one of the factors contributing as the unfavourable variance is Three Waters, but actually Three Waters had 180,000 favourable variance. So I'm very concerned that 3 months in we're so significantly overspent on that line.
Thank you, Councillor. The staff costs are significantly over budget, but the significant portion of it is the movement in annual leave, the annual leave accrual, and that's just we don't budget for the movements in annual leave. So that will generally rise in the first part of the year where we don't have the holiday season. Over the holiday season, the annual leave will drop off. We are doing some work in regard to budget that for future years so that we don't see big variances to budget becoming unfavourable, then unfavourable as we go. To your point of the governance and support, that area has our vacancy allowance in there, so that is just why we see the change in that area is that only fits in that area.
So come the financial report to 31 January, because a lot of staff will be taking leave over the December-January period, you're telling me that the variance should be coming back the other way, is that what we're telling?
We should expect to see a decrease in the annual leave liability.
But what will be the impact? I mean, I guess then if we project it forward to 30 June, are we still expecting to track closer to budget rather than, because I mean the way we're going is going to be significantly over budget, which is what my concern is.
Yeah, I can probably help with that. We will see a favourable change in the leave, whether it offsets it or not. Like, we're actively working on several things at the moment to do with the staff costs. One is leave and getting staff to take holidays. So we will see some improvement because of the Christmas period. We're having a compulsory shutdown. The other thing we're working on is managing the vacancies. And so while you'll see a significantly unfavourable variance in governance, we should be seeing that offset in other areas. So we're still working through that to see whether we can fully offset.
That's all right. And if I can, through the chair, just adding to that, I've been talking to the CFO because I'm concerned that we're not tracking lower in this space as well. But then there are some real challenges. So the CFO and I have been talking about likely bringing a report to December just to discuss staffing generally and to show that some of the challenges that we have and the plan we have for managing it, but how that will show up in the budgets. And it's likely December, I say that, it may be January, but it'll be staffing specific report.
Okay, thank you. I've got two more questions. One is, and I'm just trying to find quickly, and to Dooms with the commentary about better off funding, and I've gone past it, and it's we talk about better off funding under governance, and then we also talk about it under investment, and I'm just trying to match the comments together to find out exactly, and I understand with better off funding we get the funding retrospectively, but the commentary doesn't kind of necessarily match up, where we talk on page 41 under grants revenue, the investment account revenue was unfavourable 116,000, reflecting the level of better funding to date, and then under internal revenue it's unfavourable for 351,000 across various activities. So I'm just trying to ascertain where we're at with better funding.
Yes, so in the governance group we've got what we call it the investment account. Yes, and we have the grant funding coming into that budget, and that's the payments that we get as we spend or as we accrue against spending, and then we, as the activity, so for example as Three Waters spend, they'll receive an internal revenue, and the investment account will have an internal expenditure, so they will match. Yes, and overall, Council, we are behind budget on what we indicated we would spend.
Yes.
Yep.
Great, that's what I just wanted to double check.
Yeah.
And my last question, if I may, and it may be for Ms Nielsen. We talk about, or it may not be, under property costs were, I don't know what page I'm on, sorry, on page 43, were unfavourable 155,000, partly due to costs relating to the Dunedin Theatre Network design options work. And I know there's a lot of interest in this, and I wasn't sure that we were doing the design. I'm just what?
So Council set a resolution to fund up to 100,000 towards the costed design options. So they're managing and undertaking that work themselves, and we've provided that funding too.
Thank you for those questions and for the answers. Thank you. For my interest, on page 28 near the it's 23 near the bottom of the chart, accrued interest of 7 million and something. Now there's a helpful little thing on the next page, paragraph 13, that talks about the accrued interest representing the loan interest owing but not yet paid at 30th September. Is it, I mean, I didn't quite understand it. Is it the case that we are now required under new accounting rules to show that as debt already, even though we haven't paid it? Is that what that means? Could you clarify for me? Sorry, it's a bit of a long-winded question.
Thank you. Is the accrued interest when it says paid, not yet paid but accrued, we pay interest quarterly on the loans, but we account for it each month. So that means at the end of a month that's not one of the quarters, we have to accrue it, meaning that we record it in the books, but we haven't actually paid it in cash. And what the accounting standards now say is that forms part of the loans balance. So the loan would be higher by the amount of accruing interest that we haven't yet paid. So in the current year, we have budgeted just for the loan amount, and we didn't account for the accrued interest on the loans balance that was accrued in a separate area in the current liabilities.
So does that mean from now on any accrued interest will simply appear as an additional debt liability?
Correct, in the short term debt line. Yes, that wholly relates to accrued interest. Correct.
All right, thank you for that. Yeah, that makes sense when I finally went over it again. If we sorry, I've lost some of my questions here. If we go to page 36 and we get our magnifying glass and go down to Peninsula Connection, there seems to be $31,000 there that was unbudgeted. Is that the case, or what was that for? I vaguely remember something coming up and I can't remember what it was. Is it an unbudgeted amount that we are now spending, or what's it for?
Mr. Chair, yes, it is unbudgeted, but I'll need to come back to you with a response to that one.
Fine, okay, it's not a major amount, but be good to know. And then on page 38, we've got material recovery facility, and there's a fair old chunk of almost $3 million that hasn't been spent there. Is that just because it's a bit late being built? Is it a timing issue? What is the story there? I'd thought they were actually building the thing. Not yet.
Is this the Green Island Resource Recovery Park?
It's down here as, the material recovery facility, I suppose,
so
is the one at Green Island.
The RMA consent hearing for that is next week, so I'm assuming that it's probably waiting on that.
Okay, are there any other questions regarding item 7? Councillor Gary.
Most of my questions have been asked and answered, but I do have one remaining, and that is on page 42 under occupancy costs. It's the transport electricity costs unfavourable by 46k, mainly being the cost of street lighting. I thought we'd finished our LED street lighting project, but I just wondered what this was in relation to. Perhaps Mr. Ward would know that. No, he isn't, that's true. So there's nobody here who can answer that.
Sorry, Mr. McLean, who would normally be able to answer that unless Carolyn can, has got a family emergency, which means he's unable to be here. I'm sorry.
Maybe somebody...
That's just the price of electricity. I don't think that's installing new LEDs. Because that's about $2 million a year we pay on the LEDs for electricity.
If I could add, yes, it is just the cost of the electricity being over budget, yes.
That wasn't clear to me, thank you.
Councillor Wiley.
Looking on page 43 of our papers, consumable general costs, people and capability costs were unfavourable, 212,000 due to cost of outsourced professional services. Do we have a budget of what our of the outsourced professional services are? I take that's consultants, and when we look at unfavourable, what was supposed to be the monthly cost purely on that part of it, of people and capability?
Thank you, Councillor. I don't have the budget to hand, but the variance is 212,000. So the outsourced professional services does include legal fees as well as consultant fees.
And I also noted, and I've been quickly trying to find it again, I noted the increased costs with cleaning mud tanks. I take some of that was prior to the October 4 flood and the preparation around that. Would that be a fair assumption?
Yes, there were 2 events prior to the October. This is to September, so there were 2 events. Yes.
Right. One more question from Councillor Lucas.
Yes, just in terms of the overall capital program, and maybe Mr Ward might better answer this because a lot of it's in his area. I know we have been delivering at least at or above the total budget, but at the moment we're about 10 million behind what we had budgeted to spend. So I'm just wondering, are we still on track and intending to spend our full capital program this year? Is it just a timing issue, like waiting on resource consents or design or whatever, and just do we intend to catch up?
Certainly over a several year period. How it plays out this year will be a function of the progress of our programmes. As you've probably heard me say many times, we deliver at a programme level, not a project level. So I can say with confidence the scope of work will be delivered. The timing may shift, so that's I guess a hint that we're looking at the prioritisation of the work within the programme, and you'll see that the balance between new capital and renewals. And as we attempted to describe in the infrastructure strategy workshop with Three Waters, it's not as clear-cut as transport as what's renewal and what new capital, because obviously when a pipe is replaced, you instantly improve its performance, but in fact it's a very new pipe, and so you've got a growth component. So we're doing our best to make sure that we spend appropriately, and that balance of new capital and renewals is properly balanced. So that's not a clear answer now, I do accept, but it's something that will play out progressively through this year. So it may end that we end up lower, but the same scope has been delivered.
Thank you. Thank you.
Right, if that's the end of questions, then I move that the committee note the financial performance for the period ended 30 September 24 and the financial position as that date, seconded Councillor Lucas. Are there any speakers to the motion? Anyone having anything to say about it? Councillor Lucas.
Just briefly, I just think it's worth noting that we are tracking, we're 2.8 million favourable, which is a good position to be after, the first quarter. But that's with a favourable result for Waipori, which could easily turn the other way. I guess we need to look at our core operating, which we're basically bang on budget. So, if we can keep to that, I think that's where we want to be, is to be able to just to keep on budget. And that's reassuring to know that at the end of that first quarter. Thank you.
Yeah, I agree. It's nice when budgets and actual sort of align, but of course you don't want to take too much comfort because you really need to analyse the budgets in the first place. And also the looking at the capital expenditure graph on page 45, I'm actually quite pleased to see that actual spending is lagging a bit behind budget. This is something that I got used to in my first 15 odd years on council, where you'd set a budget and then you wouldn't get to quite spend it all, and to me that was not such a bad thing. There's been a more recent sort of fad, I think, where somehow it's been seen as good to be able to spend more than the budget because it means you're doing more. I'm not so sure that that's the case, but anyway, that's where we sit at the moment. We're comfortably below budget, and as Mr Ward has explained, they're not aiming to spend the budget, they're aiming to get value for it, and that may be a little bit below or a little bit above, whatever. So, given that... Councillor O'Malley.
Don't really think it's necessarily a great thing that when you set up a capital program you don't execute it by the end of the year. It's considered outstanding council performance. Thank you.
Councillor Gary.
I feel moved to speak on the same matter, that when we lagged behind, as the councillor described it previously on our capital expenditure, that isn't necessarily something to be proud of. It was for all sorts of reasons, and the fact that we have delivered our capital projects in the way that we have and at the level we have is something to be proud of, and is something the community told us loud and clear. And the councillor who spoke was encouraging council to do that. In fact, I recall the councillor campaigning on that matter. And so I just make the point that the fact that we are close to our capital expenditure budgets is good, and what we want to do is deliver on the capital projects that we have budgeted for, because it's for good reason that we have budgeted for them. Thank you.
Okay, with no more discussion, I move that the committee notes the financial performance for the period ended 30 September 24 and the financial position at that date. All those in favour? Against? Did I get Councillor Lucas as a seconder for that? I did. Okay, all good. Moving on now to item 8, the Waipori Fund. A very welcome bit of paper here, and I'd like to welcome Carolyn Allen and Mr. Peter Hocking from DCHL to speak to the report.
Good afternoon all. Richard Davies sends his apologies today, so I'm just stepping into the breach to talk to the Waipori Fund. Just introducing briefly performance for the quarter. The fund has had a good quarter, up 3.3% for the quarter compared to the benchmark, which is 4.2%. Quite a pleasing result, but also important to note with any investment fund that, look, it's held for the long term, so to not get too excited by any gains or losses in the short run. The fund increased by 3.4 million to 106.5 million. Also pleasing to see that gap now narrowing between the value of the fund and the inflation-adjusted capital base. And now that gap has narrowed to about $1 million. And a few bits within that. Inflation now coming back under control. Some strong equity growth, particularly during the quarter. And, of course, not drawing in the meantime to allow that fund to replenish. So that's pleasing to see that coming back in line. Over the year to September 2024, the equities portion of the fund, which is the growth piece, returned 15.8%. So that's quite strong returns for equities. But again, it's 1 year, and we know with these things, you're going to get some volatility in any markets. On the economic front, the Reserve Bank reduced the official cash rate from 4.75% to 4.75% from 5.5%. With a cut in August and then a further cut of 0.5% in September. And current expectations are for the OCR to be around 3.3% by early 2026. So those lower sort of bank cash rates should continue to support equity valuations, and that's kind of a twofold effect. On one hand, those lower discount rates increase valuations of equities, and secondly, the lower finance costs in the books of those companies in which we hold stocks lift earnings. That's the introduction. Happy to go to questions.
Thank you. Yeah, I've got one to begin with. On the back of a very pleasing result and closing the gap between the inflation-adjusted value of the fund. Question for Carolyn, our Chief Financial Officer. Now that we're within cooey of the inflation-adjusted value, are we now contemplating taking disbursements again, or are we going to wait till we get into cash positive?
Thank you, Mr. Chair. We will wait, and when we report back on the December result, which will come to Council early in the new year, we'll reflect on that then, because we have it in our budget. So we'll see how it's performing then and take a decision.
But our budget at the moment doesn't include any disbursement from Waipori this year, or does it?
It does.
How much?
It's 3 point something, so around the 3 million.
Ah, okay. I thought we'd put that on hold.
Yes, so I think when the June result was reported up for the fund, our budget was already, well beyond changing.
Okay.
Yes.
All right. Fine. So that's just something to watch.
Yes.
Any questions? Councillor Lucas.
I've got a bit of a crystal ball gazing question. In light of the election results in the US, do we have any thinking about how that might affect our fund going forward?
That's a great question, and certainly lots of commentators are turning their mind to it. Certainly in the short term, we've already seen the markets react to that election result very favourably, and unsurprisingly, because the immediate things that those analysts are keen on is deregulation and lower taxes, which will lift earnings and valuations. In the longer run, I guess there is a potential counter narrative. So what some commentators are drawing attention to the proposed sort of protectionist policies around lifting tariffs on imports. Many commentators think that will create inflationary impacts, which will lead to actually then interest rate rises potentially to actually then counter that, which affects the shape of that yield curve. And then I guess the other part of that is markets generally like stability. So in terms of foreign policy and given tensions in Eastern Europe, Middle East, potentially South China Sea, if there were any emboldening of some of those actors, that could lead to markets reacting in quite a volatile fashion. So I think there's a lot to play out, but certainly initially, and I think we've seen it already in our valuations since that election date, markets have received that favourably for those kind of immediate obvious reasons.
I take it that because it's a fairly conservative investment strategy that we don't have any Bitcoin in the investment portfolio.
That's exactly right, yeah.
Cheers. Any other questions? Okay, in that case, it's item 8. I move that we note the report on the Waipori Fund for the quarter ended 30 September 24, seconded Councillor Lucas. Any discussion? There being none, all those in favour say aye. Aye. Against? No. I declare the motion carried. Item 9, Dunedin City Holdings Limited Group Update Quarterly Report to 30th of September 24. Mr Hocking is already in the chair, and I welcome DCHL Chair, Mr Ian Lone. Thank you very much. Did I say Ian Lone? It's Tim Lone. I've done that before. Pardon me, sorry. Mr Tim Lone. Right, Mr Hocking, Mr Lone, anything you wish to add to this report?
Thank you, Chair. Not too much. Obviously, the results are tracking in accordance with plan generally. There's ups and downs as you would expect, but so far the first quarter has gone relatively well. So there's not too many surprises in there, if any. A little bit of good news, though, that I just wanted to draw your attention to, and that's in relation to Aurora. And I think this has been reported, but possibly went a little bit under the radar. And that's in relation to a win that Aurora had with the Commerce Commission in relation to advancing capital expenditure. So they have been advocating for quite some time around advancing capital expenditure, particularly in their growth regions, and they have been given approval for an additional 44 million of capital expenditure. So that's under their regulatory regime, and they'll be able to recover the revenue from that as they move into the next price path. So the DPP4. So I won't go into all of the detail, but I did get some quite technical analysis from the chairman of Aurora just to provide. So happy to take any questions on that as well if required. But I'll pass over. Oh, just one other point. We did talk about the annual reports a few weeks back, and I did introduce those, but also happy to take questions on those at this time.
The 44 million that you just mentioned now that they're allowed to invest additionally that they will get a return on, does that mean they have to fund the debt first before they get any of that return?
Yes, that does. So it is capital expenditure, so that will need to be debt funded, and that's over a period, I think, of 5 years.
So at the end of 5 years, they'll have the increased infrastructure, and they will also have recouped quite a bit of extra return from that.
Yeah, so the next price path cuts in 2026, I think it is, so they'll be able to recoup that over that 5-year period from 2026 onwards.
Okay, thank you. Are there any other questions from this encouraging report? Councillor Lucas.
Thank you. And just, I guess, following up from your comment there, Mr. Delone, and on our page 63 is your page 5, under the Delta commentary, it says here, Aurora has advised a reduction in their capital work schedule for I guess it's fiscal year 25. So I'm just, in light of what we've heard from Aurora in the past about their accelerated capital program, I was quite surprised to read that, and then also in light of what you've just said. So I'm just trying to, are they actually reduced their capital program, or is it the work with Delta is reduced? It doesn't, the commentary doesn't kind of fit together with what we know.
Understand. So, and this is also in relation to the current financial period that we're referring to, and the reduction, as I understand it, and you may have more information, Peter, but the reduction is specifically affecting Delta.
Yeah, and some of this is a timing issue. So Aurora needs to stay within its allowances under the regulations. So all up, this is positive, that the reopener to enable more spend. It's certainly positive for Aurora to actually being able to accelerate some of that work. But when I last spoke to Delta on this, they were still working through with Aurora exactly when this work's going to be scheduled. But certainly within this quarter, it had a significant impact.
If I can just follow up with that, so Aurora haven't reduced their capital work program for this year at all. It's just more probably a timing issue with Delta.
That's right, and particularly in managing within those regulated limits, so as Aurora isn't pinged with any regulatory punishments. Yeah.
Is it anticipated that Delta will still have an element of preferred contractor to Aurora, or are they entirely independent now in terms of contracting?
So Delta participated in the recent contractor negotiations and were successful, but it was a competitive process. They were awarded a good chunk of work as part of that, and I think it might be is it a 3-year commitment? It's a multi-year commitment to Delta, but there were other contractors that were successful, and there was some work that Delta lost through that process as well.
Okay, thank you very much. Councillor Gary.
What impact has losing the tree contract had on Delta? Financial impact?
Look, I'd probably need to come back to you on that unless you have any insight, Peter.
It has required some sort of work through, so it's not the most lucrative part of their business, but certainly has had a financial impact, and also then Delta's also had to work through how to redeploy staff, etc., and that piece. So I agree with you, Tim. I think that's one perhaps we can come back with an answer on.
And then the corollary of that is, what impact has that had on Aurora in terms of costs?
So Aurora is tracking favourably in terms of its expenditure. Specifically in relation to that contract, I couldn't say what the impact is, but they are tracking favourably at this point in time in relation to overhead costs.
If there are no more questions, I would like to move item 9, sorry.
Oh, sorry, Mr. Chair. There were a couple of questions that were raised by councillors that are not here in writing. Would you like me to cover
please, yes.
those off?
If
Okay.
you could read them out for a start, would be good.
Yep, sure. So the first question was in relation to DVML, and was specifically in relation to the events. So I'll read you the question. Good news in this report. And I ask this as someone who is regularly leaving town to attend gigs in other cities and indeed across the ditch, why are we seeing so little around attracting big names events to Forsyth Bar Stadium? Is it a lack of effort, or is it a lack of dollar incentives as a host city? Are we now at the stage in the context of the new Christchurch Stadium and our inability to pay to attract that we now must depend on a largely dying contest and some occasional scraps? So we did get a response to that, and I won't go into all of the detail of that response, but maybe just pick up on a few key points. Firstly, that Australia will always attract major concerts, and those touring will play multi-destinations in that country, as the risk to promoters is relatively low. I think one of the key encouraging comments is that we are at a moment in time where touring bands want more money, but promoters are looking at reducing risk, and so tours are shorter and promoters do not have high risk appetite. This will change, and I believe that we will start to see improvement from summer 25-26 when tours will lengthen and promoter risk tolerance will improve. So that's a comment from the current CEO of DVML. However, he also points out that DVML will need the ability to offer cash and structured commercial deals and will require, for the lack of better words, a fighting or bidding fund to allow it to bid for major concerts in future. And he did talk about the recent example where DVML offered, at the request of Live Nation, a considerable sum to as an incentive to bring Metallica to Dunedin, and this still did not secure the show.
Just before I get on to the next question, was that because the bidding fund was insufficient? Or were there other reasons?
I believe that is the case, but yeah, I couldn't confirm that right now, but I can.
Okay, Councillor Gary.
Mine's a subsequent question. So can we be assured, given the new CEO's comments in the ODT and his background, his sporting background, that there will still be a focus on entertainment? And when I say entertainment, I'm not including sport in that.
Look, I think it's early days for Paul coming into the role, but he is looking at a very broad range of opportunities, and he is keen to see the stadium used as much as possible to its capacity. So absolutely entertainment in all forms.
Just checking.
No further questions. In that case, I would like to move that the committee notes the Dunedin City Holdings Limited quarterly reports for the Dunedin for the period ended 30/24. Seconded Councillor Lucas. Discussion. Nobody has anything to say. I would like to make comment on the very nice graph that we see on page 62. 62, the Report to Finance and Council Controlled Organisations Committee, has nice green squares showing what's going on in terms of costs and things, and then it has a lovely big red column at the end showing the first dividend we've had for many years, I think since 2015 in fact, $11 million. So the dividend drought has broken, and even though I still consider it to be a light shower, I think a commercial dividend is going to be somewhere up in the 40 million area. I'm very pleased to see it, and very pleased to see alongside that a building up of value in most of our big council companies. So although we're not and haven't seen cash for quite some time, I recognise we have had an increase in values, and hope that we can get to a situation where we can get some real commercial dividends as well. So thank you very much for a very nice graph on 62 that shows all the comings and goings in terms of the major finances. Of course, as well as the 11 million, we're getting, is it 5.2 or 5.9 that we get for the advance?
5.9.
It is 5.9. I see 5.2 on the, well, have I read that wrong? It is 5.9. Okay, all very good. In that case, regarding the motion, all those in favour say aye. Against? No. I declare that motion carried. Item 10. Subsidiaries annual report. Right. So item 10, Dunedin City Holdings Limited subsidiaries annual reports 30 June 2024. Are there any questions relating to the reports? Councillor Lucas.
Thank you, and thank you for coming back today to speak to those that we ran out of time at the council meeting. And I had read them all, and I had a lot of questions at the time, so I was quickly trying to go back to my questions. I just wonder whether you might be able to talk to us about the new qualification from the auditors in terms of the related parties. And I know, I think things went down to the wire. The audit wasn't particularly easy this year, so maybe you could just talk to us through that and the audit process this year.
Oh golly, very fair question, and it certainly was quite a significant audit issue. So there's this is the audit report qualification on Dunedin City Treasury and Dunedin City Holdings. Yeah, okay. So it's quite a technical thing, and in some ways took us by surprise in that the relevant accounting standards for this is to do with the accounting for loans between Dunedin City Treasury and other group companies, and Dunedin City Treasury lending to Dunedin City Council. The accounting standard IFRS 9 actually hasn't changed in 15, 20 years, and the nature of our loans also have not changed. However, recent developments, with some other councils, for example, caused the auditor essentially to question the accounting for these loans. So they encouraged us to have a review. And there's a particular test, this is in the books of Dunedin City Treasury, called the SPPI test, which means that historically, we've treated our loans in the books of Dunedin City Treasury as being held at amortised cost. That means effectively holding them at face value, because we intend to hold them to maturity, and i.e. we're not looking to sell or trade loans in any sense, that they're held to maturity, and we expect the counterparties to those loans, who are all group companies, to pay amounts when they fall due. And that's so holding them at what we call amortised costs, which is the face value, has been the traditional treatment. So under the letter of the standard, when we came to review it, we found there were certain contractual cash flows which caused us not to meet this SPPI test, that not all of the contractual cash flows were seen to be solely payments of principal or interest. So technically we had a change of accounting treatment. So that change of accounting treatment would cause us to, in the books of Dunedin City Treasury, to have to revalue our loans each year to their fair value. Now, a fair value implies, well, what would a third party be prepared to pay for that loan? Even though none of these loans would ever be sold to a third party. So if, for example, a loan, let's say we've got a loan because we're able to pool our funding as a group and borrow very efficiently. So and we're also carrying out hedges to actually lock in favourable interest rates and to actually have some certainty around interest rates. So if we find ourselves out of the money on some of those rates because, for example, interest rates increase, the OCR increases, all of a sudden a third-party buyer would say, well, why would I buy one of your loans at its face value? I'd rather pay less for it because I can actually get a debt instrument somewhere else that will pay me a higher coupon rate. So when you fair value these things, it leads to great big fluctuations year on year in the values. So as a case in point, if we had actually followed the letter of the accounting standard this year, Dunedin City Treasury would have reported a profit of somewhere in the region of $18 million, which is just a movement in profit and loss between periods. Ultimately, the whole business model of Dunedin City Treasury is to pool our funding requirements and to lend cost efficiently across the group. The $18 million profit wouldn't make any sense at all. It's just moving profit between periods. So for that reason, we felt that it would not give a fair view to our shareholders as to as to the real state of affairs with those loans. And also we have now taken steps to adjust the terms of those loans such that this won't be an issue in the future. It will just wash out. So that, and one of the things was there's one particular contract term wherein there's like a wash up at the end of the year to actually mean that look, Dunedin City Treasury is there to provide a service really to the rest of the group. So there was this wash up amount, but because that caused the classification of the loan to be changed, it's an easy contractual term for us to just take out of those agreements and manage things in a slightly different way such that we can get back to legitimately holding those loans at their face value. So that qualification will have to be in place for 2 or 3 years because it flows into the comparative periods in the future. But it will wash out, and we've already taken steps to actually change those contractual terms so this could be avoided in the future. So it did drive a lot of work. Did drive some quite big numbers, but I'm sure you'll agree if we'd been reporting to you in these financial statements a profit of $18 million for Dunedin City Treasury, that would be probably raising more questions than are helpful.
Thank you. That was a very useful explanation. I think you made it quite clear, and I think it's good to hear that you've taken steps so that in time that will disappear. My next question is in relation to Dunedin Stadium property in terms of the events after balance date, where they talk about signing a lease variation agreement with effect to DVML to reduce the annual rental income from 2 million to 1 million. So I'm just, could you just talk us through what that actually means, please?
Well, it's largely as it reads. So we did sign an agreement between DSPL and DVML to reduce the rental that DVML were paying for the stadium, and this was to reflect the market conditions that DVML were experiencing. You'll be obviously aware that we're having a look at that whole funding model, and so this lease arrangement was put in place as an interim measure, and then that'll be reviewed again with the review of the funding model.
Thank you. And my last question for now is in relation to City Forest, where they talk about their outlook, and they're talking about funding the dividends in the future and it being sourced from selling carbon credits. And I'm just wondering about that realistically in the state of the current market for carbon credits. Is that actually the most sensible, or in the most sensible time in the next wee while to be selling those to fund a dividend? So
with City Forests, we've had an arrangement in place that they will be looking to realise their surplus carbon credits, and that will come through, or a portion of that will come through as dividends to DCHL and flow through and the dividend payments that we make. And so if we look at the current year and the 11 million dividend that was paid, a lot of that was on the back of special distributions from City Forests. The intention is that ultimately that special distribution would be met by the sale of carbon credits, but because the market was depressed at that point in time, the carbon credits weren't used, number one. Number two, the uncertainty around the land and water reforms, they weren't looking to release carbon credits at that point in time. We are getting to a point where there is much greater certainty around the future with the land and water reforms. The carbon price is at a far more reasonable level, and so we will be working with City Forests to ensure that they're looking to release carbon credits. And yes, that will fund some of those distributions, but that's only to a certain point. So we know what the level of carbon credits is that we have available, and we'll be looking to see that they realise some of those carbon credits on a regular basis to help with those distributions.
Just on the carbon credits issue, I'll come to you in a moment, Councillor Gary. The last time we sold carbon credits, I think it was a few years ago, and I think they were trading at something like $80 each. We've got a million of them. We're currently looking at $60-something for carbon credits at the moment. Would you be essentially wanting to wait perhaps until we got back up to that higher value of carbon credits before you started to trade some of them?
Not really. Our intention is that it's done on a systematic basis, so we're not wanting to speculate on the market and hold off in the hope that it might recover to a much higher level. Our intention would be to be allowing, and so we've got a policy in place which monitors the price as well, but we'd be looking to realise carbon credits on a systematic basis over a period of time.
So that will smooth the dividend flow, actually, that we're looking for?
Yes, it would.
Yeah. Okay. Councillor Gary, you had a question.
Thank you. And on page 23, I was really delighted to see the level of detail around the intern direct program in there. It's probably the most detail we've had. And also pleased to see around the extra elements of professional development and so forth. I wondered what the interest in that program has been like this year, and I was delighted to see the balance of gender. It's been great to see women coming through, and that's playing out at the board level too. Can you just speak to the interest in this program?
Sure, I'll kick off. The interest was very good, and we were delighted with the quality of the applicants that came through, and also the engagements that we've had, which have been numerous subsequent to that. So we've had question and answer sessions, we've had networking events with them, and so forth, and I've met one-on-one with some of them, so that's been really good. They're very enthusiastic. Peter was actually involved as part of the recruitment panel, so I might let you just talk to that.
Yeah, all up we received 45 applications this year, which is pretty good. Shortlisted 8 and appointed 4 this year, so the interest was very strong. And generally the calibre of candidates applying was very, very good.
So that 45, that's quite astonishing. Is that a huge growth from other years?
To be honest, I wasn't around for the last intake, but
it certainly sounds like it, and it was great to have that included in terms of that detail. Thank you.
I would like to go back to Mr. Hocking's very interesting discussion on fair value and face value. You've said that we just haven't been in a position, or we haven't historically anyway, sold any loans to third parties. Is that a fundamental policy that's written in stone somewhere, or is it just a convention that we've had? It's just how we've operated in the past?
That's how we operate. I guess it reflects the terms of the loan agreements between DCTL and each of the group companies and DCC. So we wouldn't be looking for DCTL wouldn't look to sell its loan to DCC to anyone, for example.
Right, but it conceivably could if it's not written in a policy somewhere.
I imagine it'd be written into the terms of the loan agreement. I'd have to come back to you on that one, I think.
Okay. Yeah. If you could just confirm whether that is a hard and fast or just a convention, would be interesting to know.
Okay, certainly.
Right. Any discussion?
I did have another written question as well in relation to this.
Right. Yep.
So, and this is just in relation to the airport. The question was, well, it's great to welcome direct flights from and to the Gold Coast from next June. Arguably losing the direct jet service to and from Wellington has a bigger impact on the status of Dunedin Airport, both economically and from a reputational perspective. Any thoughts on that, and what are we doing to reverse this retrograde and punishing change? Just some comments from Daniel De Bono, the CEO at the airport. It's important to note we still retain jet services to Wellington, with the recent schedule changes announced by Air New Zealand seeing the overnighting jet from Wellington being graded to an ATR 72. We continue to talk through the impacts of this with Air New Zealand and expect the situation may change again in the coming months. The basis for the downgrade from the jet to the ATR is due to the ongoing issues with the Pratt & Whitney engine on their A320s, which is not expected to reach a full resolution until the end of the 2026 calendar year. Further exacerbating this is the sustained reduction in corporate and government demand, which has seen a reduction in route profitability. Our view is that this is temporary and we will see the overnight jet return at some stage. We are doing everything we can to keep the dialogue open with Air New Zealand on this, including our offer for landing charge relief rebates. Unfortunately, we are not the only airport affected by Air New Zealand's changes, with Invercargill losing all its flights to Wellington, Queenstown losing its overnight jet from Christchurch, and deeper schedule reductions at most of the North Island regional airports. We know some ministers are unhappy with Air New Zealand's schedule changes, particularly from a regional development perspective. We will continue to work hard on seeing the return of the overnight jet.
Councillor Wiley.
Just following up on that, the key issue, as I also understand it, is the fact that that jet was also the Auckland to Wellington to Dunedin jet. So it was the last flight out of Auckland. You've got the direct one at 4:50, and this was a 5:30 that gave you that little bit more window. Is there ability to go back to Mr. De Bono and the team at the airport and ask if they've made any headway with talking with Air New Zealand and about linking a service that leaves like at 6 p.m. and coming in via Christchurch, landing in at 8:30, just because you can't code share or you can't code a flight Auckland Dunedin as such once that service is gone. So essentially having that route planned, providing a later departure for a late arrival. Hope that makes sense.
Yep, we'll take that back to Daniel.
Okay, well done with the questions. Therefore, I move that we note the DCHL annual reports to 30 June 2024. Seconded Councillor Lucas. Any discussion? Councillor Lucas.
I would just like to congratulate DCHL on what was a successful year, and to be, to meet your statement of intent, paying the dividend that we asked of you. I think that's worth noting. I also think it's worth noting, particularly for Aurora, and I think it's probably been missed, that they reached their power pole maintenance replacement of all their red tag poles in this past financial year, which is, I think, is a significant milestone, and I think that's in particular worth noting. I also think it's worth noting, if we look at DCHL's annual report on page 37, they talk about it, that it was a 3% return on shareholders' assets or shareholders' funds to council, and I also think it's worth noting on Aurora's cash flow statement, is what we've talked about before in the past, is that their operating cash flow is not, it shows again, is not enough to fund their capital work program, and it's that's the significant asset that we've talked about in the past, and I mean that's just shown again. But I just think overall it's just thank you and appreciate you coming along today to answer questions. Thank you.
Great, and I agree with all of that, and would like to add that from my perspective, the reports that we're getting, the graphical information, the way it's presented, and also the rapid responses that we get to any of our questions privately to any of you has been really most welcome. It's very gratifying to be in a position where there's actually an aspect of council control in the council-controlled organisations, which used to be derided as council controlling organisations, and not just here. It was a bit of a national trend apparently, but lovely to see that reversed, and thank you very much for your candour, really appreciate it. It's been moved and seconded. I move that all those in favour say aye. Against? No. I declare the item 10 motion carried. That brings us to items for consideration by the Chair. Nobody wants me to consider anything. That's fortunate. Thank you very much for that. I therefore declare the meeting closed at... Oh, sorry. Not closed. Moving into non-public. Right. Pursuant to the provisions of the Local Government Official Information and Meetings Act 19... Against? No. Carried. And thank you very much, media, for your attendance.